Good.
Hey Jacalyn, how you doing?
Good. How are you?
Good. I just wanted to touch base with you and talk about the one thing that everyone is talking about in the real estate market, which is
Interest rates.
interest rates. Yes. Can you tell us about where they're at right now and how they're looking?
So, at the time of this recording,
Okay.
assuming I know nothing else about your qualifications, we're like seven-ish.
Okay.
So, obviously, depending on a whole bunch of factors, but we're in the low to mid sevens. I'd say high sixes, depending on your qualifications, buy down points, and all of that stuff.
Okay. Okay. And historically, I mean, I know everyone has had this 3% in their head, but that's never coming back.
No, that was like clearance interest rates.
Yeah.
Like the end cap at Target, those ones is like once that yellow tag's gone, like those rates are gone, right?
And they're not coming back.
No, they're not. Sorry.
And so historically, what is a typical interest rate, would you say?
I mean, so I've been in the industry since 2007.
Okay.
When I got into the business, interest rates were like 6, 7, 8, and like to the point where you were stoked if you got under 8%. And then they dropped significantly and they've kind of just like yo-yoed. I think average rates are in like the mid sixes. So we're really not that high. I think because we got that teaser rate of 3% and 2% in some cases, I feel like everybody's like, well, everything's unaffordable now. It's like, well, no, this is a more normal market when it comes to interest rates.
Yes.
Affordability is a different conversation, of course.
And because things are more normal, what has happened to housing prices?
They've stayed pretty consistent,
Yeah.
right?
Yes.
So there hasn't been, like, everybody's been waiting for this big drop to happen in property values, and we know that that's not happening. But I think we also have, like, a lot of houses on sale
We have
right
a
now.
lot of houses on the market right now, like over 10,000, which is way high for the Denver metro area. And so what that is doing is it's actually making it a really good time for buyers.
Yes.
There's no bidding wars. Buyers can ask for concessions. And what can buyers do with concessions?
Buy a lower rate.
Which means we keep on throwing around this buy down rate term, and I don't think a lot of buyers understand exactly what that means.
Yeah. So there's always a base rate of the day, right? So let's just call it 7%. That means it doesn't cost anything for me to get that interest rate. And there's no overage left in it. So if I can't charge you, there's no benefit to me as a lender to charge you a higher rate. I can't make more money off of you if I charge a higher rate. I have to give that back to you in the form of a credit. So the best way to look at that is if you ever hear anybody say, oh, it's a no-cost loan, that's how we're doing it. I'm charging you a higher rate so I can give you money towards your closing costs because the costs exist one way or another.
Yes.
When you have the buy down, now I can go to the bank and say, hey, I don't want 7, I want 6.5. How much do I have to give you up front to get 6.5? And so now I have that lower rate. And so with the 2-1 buy down, which is super popular right now, you get that temporary buy down. So if the rate is 7, I get to start year 1 at 5.
Wow.
Which might be $1,000 cheaper on your payment.
Yeah.
And then in year 2, it goes to 6.
$1,000 a month.
Yeah, $1,000
That's
a month.
huge.
Year 2, it goes up 1% to 6. And then in year 3 and beyond, so it's kind of like an ARM, but there's a stopping point and there's no additional fluctuation. I stop at 7. And then the goal is, and ideally, we're going to see some kind of a refinance opportunity in the next 12 to 24 months. So I can refinance you out of that 2-1 buy down somewhere under 7%. But what's really nice about it is if you do it today, you get to lock in 2024 prices versus what we might see in 2025 when those rates actually drop. Because when rates go down, way more people come into the market, right?
The buyers will all come out. I mean, it's going to be, and obviously I can't predict the future, but in what I've seen in the past, once those rates start going down just a little bit, there's going to be so many buyers coming out because they're all sitting on their couches right now waiting.
Yes.
And then they're all going to come out and the bidding wars are going to start happening again. And you're going to have to waive inspection items and appraisals and all of that jazz. So what's that phrase? Marry the house, date the rate?
Yes.
Yes.
Yes. So we're still there, right?
Yeah. Yeah.
And for every 1% that the interest rates go down, 5 million people become qualified to buy at that price point. So if I was priced out at 500 because rates are 7, once they go to 6, I can now buy at that number. And if you were one of those people that was waiting for those rates to drop because you want your payment a little bit cheaper, now you've got to compete with all of these other people. And so I think now more than ever, if you can afford to buy right now and get into the market, it is a really, really good time to do it. There's tons of deals to be had. There's concessions,
Tons.
plenty of negotiating opportunity because there's sellers who've had their houses on the market for 2, 3, 4 months. There's nothing wrong with them. We have a lack
Nothing
of
wrong with them.
buyers.
Yeah. We literally have it's crazy. It's crickets out there.
It's weird.
I mean, I have a house on the market and we've dropped the price $60,000.
Oh, geez.
So it's $60,000 below what it is valued at. Like, that's great savings.
Right. And so would somebody consider that kind of a price drop prices are plummeting in value?
I think people do get scared about that.
Yeah.
But if you look at our values overall, we're still up.
Yes.
And the Denver housing market consistently goes like this.
Yes.
And, everyone asks about a bubble. The only way that's going to happen is if we have a major population decline, which is not happening. People are still moving here.
Yeah.
And, we have a large young generation, and they're stepping into the housing market every year.
Right.
So we're going to continue to go like this because we just don't have enough houses.
Yeah. There's a lot on the market now, though. So
A lot. So get in while you can.
Get in while you can, because just like if you thought you could, if you're one of the people who was sitting on the fence back in 2020 waiting for something to change, and you're like, oh man, I wish I could have gotten into the market, and that one's passed. This is the next one.
Yep.
And so if you miss this one, I don't know what's next. I mean, there's always the ebb and flow of the market and things like that, but property values are just going to continue to go up.
Yeah. I mean, you can look back decades and decades and decades. So I have so many people who come to me and say, I wish I would have bought 5 years ago. I'm like, okay, well, don't tell me that 5 years from now.
Sure.
So
Yeah. Cool.
All right.
So moral of the story, buy
go
a house.
look at houses.
All right,
Thanks so much, Jacalyn.
Thank you.